Hello and welcome. Markets today largely were flat for a better part of the day. You saw some movements intraday, but outside of that, very flattish market. We've ended a 0.25% higher, very close to the day's highs. You saw a decent breadth, 1:1 on the Nifty 50 index. In terms of the gainers, you saw some decent moves, 3% lower on Adani Ports, HDFC Life down another 2%, Shriram Finance down 1.5%, so was an SBI Life and an Ultra Tech. M&M, Coal India, Eicher Motors, Maruti, Tata Motors PV, the list can go on with regard to auto especially. You saw some very good traction on all of those names, at least from the Nifty pack. Those names have actually stood out and done very well for themselves. In terms of the auto index itself, and let's quickly pull that one up. The Nifty Auto was up 1.6%, is top sectoral gainer except Tube Investments and Bharat Forge. The gains were led by Sona BLW, Exide Industries, Hero MotoCorp and TVS Motor. All of those gained 3% plus in trade, driving the Nifty Auto Index higher, and that was the top sectoral performer in trade today. What you also saw, at least among sectoral outperformers and underperformers, was the Realty pack. That was down 2%. There was definite pressure. Also, the Defense pack was down around 1/3% thereabouts. Consumption, oil and gas, energy trended in the green. Outside of that, it was very flat. So banks, FMCG, pharma, healthcare, metals were all absolutely range-bound and very flat in terms of the trade today. But that being said, let me go across to Sajid. He's here with the FNO Snapshot.
Thanks, Harsh, for that. The market breadth, as you know, was more in favor of the declines today. The Nifty finally, in the last 90 minutes or so, we saw Nifty inching up on the back of, some kind of, shorts getting covered there. But you need to remember that today was BSE expiry, so you had some kind of activity coming in many of the stocks which are part of the Sensex. So the Sensex expiry also had some role for the index as a whole to move up or inch up to about 24,300 at close there. But if you look at the banking pack, it started off on a good note, but then we saw some shorts getting added across the board, across the banking sphere, finally ending almost flat there. There's a shorts position which is coming up, addition coming up, 2.5% jump in open interest for banking. And look at the constituents of the bank. We saw a lot of shorts getting added in HDFC Bank in the morning hours, but then towards the end we have seen some covering coming in there. ICICI Bank and Axis continues to see some kind of short build up there. SBI, PNB and HDFC Bank were the only ones where we saw some long build up at the close of trading hour today. But if you look at what's happening in put and call writing, a lot of unwind happening for puts, especially in the lower strike below 24,200. We saw that unwind happening for 24,200 and 24,100 strikes coming in, and some aggressive put writing coming in towards the second half of the day. Finally, the end of the day, while the call writers have an upper hand at 24,300, we ended the index ended about 24,300 for the day there. So we still have a good support coming at for the Nifty between 24,000 and 24,200 now, and we'll see that resuming tomorrow, depending upon how we are seeing some of the global cues coming in from the global markets there, because Brent is now about $91 around $91 or so. So that's something which also needs to be factored in. Future gainers included Sona BLW, Hero Motors and TVS. So auto ancillary packs were the biggest gainers in today's trade. Among the losers, you had KPIT Tech down nearly 8% after a muted commentary on earnings coming in. Prestige was down 4.8% and Waaree Energy is down 4.7%. So all the stocks impacted by the earnings there. Premier Energy was up nearly 24%. KPIT Tech in terms of open interest gainer was up 21%, and Swiggy saw some good position build up in the stock. Among the losers in open interest, you had Wipro, Godfrey Phillips and Torrent, where we've seen some shorts getting covered as well for Godfrey and Wipro. But you ended the day about 24,300. You won't complain about it, but it still is a bounce based on shorts getting covered, and maybe going into Friday trade, there would be some cautious outlook on the index.
Okay, all right. Thank you so much for that, Sajid. In fact, let me go across to Darshita. She's here with some of the cues you want to keep on your radar for Friday's day of trade.
Right, here are the key market cues to watch for July 31st, and starting off first with global triggers, wherein investors will keep a close watch on the US Employment Cost Index, Eurozone inflation data, and a host of economic releases from China, including its rate decision, jobless rate, industrial production, and retail sales. Now, back home, India's forex reserves data will also be in focus. Now, coming on to the earnings, wherein the spotlight will be on Maruti Suzuki, ITC, Sun Pharma, and Bajaj Finance, all key Nifty constituents whose results could influence the market direction. Now, among the other companies, earnings are expected from ABB India, Dixon Technologies, IOCL, GAIL, Glenmark Pharmaceuticals, Blue Dart, Nalco, and Aditya Birla Capital, making it another action-packed day for the broader market. Now, in terms of corporate announcements, Shanti Gold International will consider a right issue, while Muffin Green Finance, CleanMax Enviro, and Ashika Global Securities are set to discuss the fundraising proposals. And finally, in the primary market, Manipal Health Enterprises IPO will close for subscription on July 30th. So those are the key triggers to watch as the market head into the Friday's trading session.
All right, okay. Thank you so much for that, Darshita. Let me bring on board Rudra Murthy, BV of Vachana Investments, joining us this afternoon. Rudra, how are you looking at the market right now?
Good afternoon, Harsh. For me, market is definitely range bound, but you have a positive bias. In spite of all the global geopolitical tensions, again, crude inching up, all that is just shrugged off, and market is holding levels above 24,000 on Nifty, which is really positive. But then we should not forget, market is still in that range of 23,800 on the lower side, and yes, on the higher side, 24,350, 24,400 is the resistance zone. Now we are at the upper end of this band, and yes, if we decisively close about 24,400, then again the next move towards 24,600 and then 25,000 will be on card. And relatively, if you see, yes, this move has been supported by IT, auto, and select pharma stocks. And you have to be very sector specific and stock specific in this market. And if you see similar levels on Nifty Bank, yes, strong support for the Nifty Bank is at around 56,700 to 57,000. And yes, you have resistance kicking in at 58,000, 58,500. So for me, both Nifty and Nifty Bank are range bound, and we are now on the upper end of the Nifty, and you have to be very sector specific and stock specific in this market. For me, yes, autos, new age and platform, which I've been very bullish for a long time, looks very good. And even for me, select pharma, IT, these are all some of the places where one can definitely be stock specific and on the long side.
Rudra, how do you look at some of the auto companies? Hyundai, today we saw Hero Motor also being very active in today's trade.
See, I'm very bullish on Hero MotoCorp and even TVS Motor, which looks very strong. One from the two-wheeler pack, if I have to pick between the Bajaj Auto and Hero MotoCorp, definitely it is Hero MotoCorp. In fact, last week I'd even recommended that at levels closer to that 4,900, 5,000 zone. From there, Hero MotoCorp has already given a 3% to 5% kind of a move. Still long way to go. Even at current market price, I will recommend Hero MotoCorp. Stock looks very strong, and yes, it can move towards that 5,500, 5,700 zones. And for me, both two-wheeler and auto pack looks very strong. TVS Motor is another stock which looks very strong to me. And even Maruti is making a strong base. And yes, post result, you can see a move on the upside. So these are some of the stocks which look very promising to me.
Pick Rudra for today.
Yeah, I have two stock recommendation both on the buy side. One is Maruti, and yes, today's movement on Maruti has been positive, and I'm expecting positive numbers to come. And Maruti can first head towards levels of 14,500. You have been seeing that rising top, rising bottom formation with volume support. So for me, Maruti is a buy at current market price. Look at target of 14,500 and have a stop loss of 14,050 for this long call. For me, new age and platform is another sector which I'm very, very bullish. Stocks like Nykaa, Paytm, Eternal, they're all very, very good on chart. So I am picking Paytm now at current market price. Buy Paytm. Look at targets of 1,375 and then 1,400 to come. Have a stop loss of 1,310 for this long call on Paytm.
I want to also quickly ask you on charts, Rudra. Eternal, Swiggy, Is there a view on any of those platform companies?
Harsh, very, very clear view. I will avoid Swiggy. In fact, last time in one of the afternoon shows, your colleague asked me the same question, and my answer comes the same. So I will have Eternal and not Swiggy. And Eternal, even at current market price, it was at around 280 when I recommended last. Even at 305, 310, it looks very promising to me. Yes, 335 and then 360 can come on Eternal. If you have Swiggy, definitely switch over to Eternal. I will not buy Swiggy, and Eternal definitely on charts looks much, much better than Swiggy.
And what about Hyundai, Rudra, on charts? You saw a bit of a spike. The numbers were a beat versus estimates, I believe, and therefore the market was a little bit enthused. Wasn't exactly a beat, just marginally, a percent odd. But give us a sense, how are you looking at the stock on charts?
See, Harsh, for me, this stock has a resistance now at around 2070 to 2100 zone. It has been consolidating after a clear down move. So for me, if this stock can sustain above those levels of 2070, 2100, yes, then a fresh buying can come on this stock and it can head towards 2300, 2350 zone. But at current market price, I will definitely avoid. I will wait out and see if it can cross 2070 to 2100 hurdle, and only if it crosses that resistance, then I will be a buyer. Or else, why do you want to look at Hyundai Motor when you have good stocks like Maruti and TVS Motor from the same sector, or even look at Hero MotoCorp from the two-wheeler? Looks much, much promising to me. Charts are much bullish to me compared to Hyundai Motor. I would definitely prefer from two-wheeler either Hero MotoCorp, or I will prefer a TVS Motor or an M&M over that of, let us say, Hyundai Motor.
Okay, what we'll do is slip into a very short break, come back. Rudra, thank you so much. We'll let you go as well. Slip into a short break, come back, and talk a little bit about some earnings which have come and will be in focus for the day of trade of Friday. Thereafter, talk about our key theme of the day. And we'll be speaking about renewables today, and we'll talk about how commodity cost pressures are likely weighing in with regard to the numbers of some of the players. Welcome back, and you know, there's plenty of earnings coming our way, and you know, in terms of the renewable space, we had Waaree Energies come out with numbers. Now Praveen Sahai joins us. He's research analyst at PL Capital. You know, plenty happening, Praveen, in this renewable energy space. What we're seeing is, at least for a couple of companies, we don't have all of them yet. There's plenty of the smaller ones yet to declare numbers. But give us a sense of the trend. The understanding is that there's been some margin contraction. In fact, the margin contraction has been a bit elevated versus expectations. Could you kind of reconcile that for us and give us a perspective as to what's playing out?
Yeah, hi. So good evening to everyone. So definitely that's the Waaree number has been quite, you know, on the margin side, disappointing in terms of the contraction has been severe. There is not only one reason, there are multiple reasons for them. So like in the first quarter, because of implementation of ALMM2, and because of that, there is some delay in the execution pipelines. Apart from that, there is also a spread contraction. Module to cell spread has also contracted in the non-DCR largely. Thirdly, in the US market as well, what they had highlighted, there is some slowdown in offtake because of tariff issues in the last 6 months. So there are multiple issues we had seen in the Waaree for the contraction in the margin. Whereas in the similar time, if you look at the MB, which has given a very strong margin because of a cell, external sales of a cell has been the higher, and that has given them a very good uptick in the margin profile. Now the way forward, because from here onwards, now the ALMM2 implemented and with the certain restriction, and now the ambiguity related to that has been over. So we see the offtake in the domestic market for the DCR module to improve from here, and that will bring back some kind of a margin. Secondly, as well, in the US market, there is some stability, or you can say that the utilization level as an overall company level will improve. That will also bring back a certain portion of the margin. So quite a hopeful, and whatever the commentary we had gathered from the management, that's also quite optimistic. So believe this margin pressure to ease off down the line Q2, Q3.
Praveen, hi. Sajit here. Give us a sense of the kind of cost pressures which are coming in. Do you think that this cost pressure is sustained aside of the logistics part of it, which is because of the Middle East crisis or geopolitical issue? The other cost, raw materials are also going up. Is that a cause of concern?
Definitely, that's one of the cause of a concern for the industry. As the rupee is also depreciating and large part of our raw material imported. Now, the one point over here is with these cost pressure, we are also as an industry transitioning towards in the domestic market towards a DCR. So that's a non-DCR to the DCR transition will bring some realization uptake. So some numbers to quote here, non-DCR modules in the market is nearly around 13, 14 cents, whereas in the DCR modules were nearly around 23, 24 cents. So that's one kind of a cushion what we are looking at. But definitely there is some, the cost pressure which is going to stay over here for the rest of the year as well, whether it's a rupee depreciation or logistic issue. But again, that's a DCR fetch and quite a higher margin. The contribution of the DCR to go up from here, which will subside the impact of the overall commodity pressure in the renewable.
In your opinion, as this ALMN has been extended by 6 months, will that have a material impact to the profitability of many of the domestic companies?
So this extension is for the restricted. It's not for the entire 100% demand. This is largely to do with the CNI and the rooftop solar. That's account for nearly around 40% of our overall demand. So relaxation is till December. The rest, because with these relaxation, that also the government has tried to address the issue of the availability of a cell, domestically manufactured cell, those who are for the IPP project. So to some extent, I can say those who are cell manufacturers, definitely it's beneficial for them in the way forward, because there is a still long way to go for the overall cell backward integration. Right now we have around 31 32 gigawatt of capacity of a cell, and this extension to give some kind of a relief to the industry. I am not in the view that with these extension the margin pressure to continue, because this is still a scarcity of the cell is there in the market, and which is going to benefit the players who have a cell capacity, whether they are transitioning to the DCR or whether they are selling in the external market.
Some of them are also involved in BESS as well. How do you see that play? Is there a cost pressure coming in there as well?
Definitely, that's as the rupee depreciation and the logistics issues, that's also increased the downward trend of the cell prices. So that is the those who are awarded projects, I can say there are a very few. In the best, which are on the lower pricing, they may get some kind of issues. Whereas if you look at our last year, that's nearly around 1.1 gigawatt hour of the total capacity for the BESS the last year FY26. Now from here onwards, we are largely assembling, containerizing only the BESS projects, and there are nearly 30 odd players, those who are doing the assembly work. But the cost pressure, as you are highlighting, this will subside with as per the tenders, the awards going forward, at what pricing that is going to come at. So I don't see there would be any hindrance to the growth of the BESS the way forward, because we are largely assembly over here, and the whatever the projects or the tender to come in, will be priced accordingly.
Thank you very much for giving us this perspective and joining us today. This is Praveen Sahai joining us and giving us a perspective on the renewable side of the business there. But moving on to the big numbers that came in today, towards the end of the market actually, the NBFC Bajaj Finance reported nearly a 27% rise in net profit for the quarter, with steady growth in its loan book, and NI seen at roughly around 22.9% jump. AUM saw a 24% jump, and Mitali has the details. Mitali, give us what's the highlight from the number?
Right, so talking about Bajaj Finance, and Q1 FY27 has been a strong and largely in line quarter as the streets were estimating for the company. It was supported by robust loan growth, better asset quality, as well as a disciplined risk management by the company. The NII that has risen by nearly 23%, while the profit after tax has jumped 27%, broadly in line with the street estimates. But the biggest positive surprise, it came from their provisions, which were lower than expected, which declined despite the company created a prudent macroeconomic provision of around 296 odd crore rupees during this quarter. Asset quality that also continued to strengthen. GNP improved to 0.96%, while the NNPA was at 0.39%, highlighting healthy credit trends for the company. Excluding the additional management provision that they created, underlying credit costs were down 14% on a yearly basis, reflecting improving collections and also a stable credit environment. Talking about their return on assets, that was again a beat. Management has already skipped that guided range of 4.4 to 4.6%, as the ROA for this quarter is held up at 4.7%. That is quite healthy, and that's a strong beat on the estimates. Also, the standout performer, if you see on a segmental basis, was their gold loan business, where the AUM has expanded actually sharply by around 112 odd percentage on a yearly basis. Also, company added 194 new gold loan branches in just one quarter, and plans to expand the network to nearly 2,700 to 2,800 branches by the end of FY27. So overall, a healthy quarter coming in for Bajaj Finance, and largely in line with the estimates, but provisions and ROA, that is a strong beat for this quarter for Bajaj Finance.
All right. With that completely timed out, thank you so much, Mitali, for that. Swiggy's numbers also, and you'll see the impact on the stock price come Friday. Soft set overall. You've got a miss on EBITDA, you've got a miss on PAT, or rather loss. Losses have expanded versus estimates as well, and therefore Swiggy will well be in focus, and this is despite a top line being mildly stronger than what was expected. So you'll likely have Swiggy in focus as well. But completely timed out on this edition of the show. From Sajid, myself, everyone who puts the show together, thanks so much for watching.